Well, hello there, traders. This is Rob Reinhold, and we are less than 24 hours away from the US Payrolls report. Let's talk about what the expectations are and kind of where we are going into this report. We got the payrolls, the ADP private payrolls this morning, and they were weaker than expected. They were supposed to be around 150,000. They came out at 99,000. So it's more evidence that the labor picture in the United States is getting weaker. So this week we got weak JOLTS, jobs reports or job openings. We got weak ADP. Going into this Friday, we had estimates for 164,000 jobs. Unemployment rate is actually supposed to go down from 4.3 to 4.2, and wages at 0.3. All right, so let's talk about where we are right now. If you remember about 6 months ago, we were in the bad news was good news camp in the market, meaning that if the reports came out weaker than expected, it was good news because it means the Fed would cut rates more. And I said that at some point, we're going to get to the point where bad news was bad news. And we got to that point in July because we got that July payrolls report, and that's when the market really got weak, is that all of a sudden things are weakening too much and the Fed hadn't cut interest rates yet. So let's talk about this number. Now again, these are going to be my opinions, but we'll see this happen tomorrow. I think if this number is weak, and probably weaker than about 120,000 jobs, I think it's bad for equities. I think we see a sell-off in equities, sell-off in bonds, which means sell-off in the US dollar. I think that's the most likely thing to happen with a weak report, because it's going to mean that the Fed's probably going to be more aggressive on cutting rates. If this number is higher than 200,000, then I think the market will be like, oh, the markets or the economy is stronger than we expected, and that's going to be good for equities, but it's not going to be great for equities because what that means is that people are going to take a look at their projections for interest rate cuts this year and say, well, maybe they're not going to be as many as we thought. And so what will likely happen is the bond market probably goes up, the dollar goes up, and the stock market goes up as well. However, it's not like it's great news. This is just kind of a relief. So I think if we get a good jobs report, I think we're looking at a 0.5% to 1% move higher in the equity markets. Right, now let's talk about what if it's in the middle. If this number comes out between 120 and 180, this is Goldilocks. Not too hot, not too cold. This is what the market wants. They want to see a nice, solid, not too hot number, but not too cold. If we are somewhere between the 130 to 180, that's going to be perfect. But if we come out as expected, if we hit this 164 or maybe even like 170, the market is going to love that number. They're going to love it. And I think if that happens, we're going to see a 1 to 2% rally in equities. We're going to see a slight rally in the dollar. I think the dollar is going to go up a little bit. Bonds are going to go up a little bit. But remember, if it comes out as expected, the Fed pretty much is going to do what it's already priced in to do. So they're not going to have to really ratchet up their bets on interest rates. So the dollar's not going to have a ton of strength on that news, but it probably has a little bit. Those are my three scenarios of what is likely to happen when we get those numbers tomorrow. So let's go through all the currencies and take a look and see where they are right now. Right, I'm going to pretty much ignore cryptos here because this is the crypto basket. And you can see it's flat to weakening. And going long cryptos just does not look good here. Look, there will be a move in crypto tomorrow. If the dollar goes down, I think crypto actually goes up a little bit along with gold. I think that's probably the play. I don't think there's going to be a big move in crypto. So I'm really focused on the foreign currencies, and I'm really focused on both the yen and the dollar. So I'm going to a 4-hour chart because I want to see where the velocity is. So right now you can see yen had a big run up and we're basing. Okay, we're basing on yen, but look, moving average is still rising. RSI is still elevated. We're down below the parabolic star, so we're taking a base. I love this kind of price action going into a report because it's overextended. So give me a ton of time for this to base and then we get a breakout higher. I would love to see that. So I am leaning bullish in the yen for sure. Dollar looks weak. I want to just point out, here is the candle when we got a good report off of the services PMI, and what happened? It wasn't able to hold the gain. So I still like dollar on the short side. We come over here to the Swiss franc. Swiss franc is looking moderately bullish. You know, it's looking okay, but we got a lot of overhead resistance up here. I mean, a lot of overhead resistance. So I'm moderately bullish on Swiss franc. Euro, I can completely ignore. There is no reason at all to look at euro. I can completely ignore the pound as well. Not really going anywhere at the moment. CAD is going along with the dollar, so I do like the CAD short as well. There is also an employment report out for the Canadian dollar at the same time. If you want to play CAD instead of dollar, that's just fine. I think they're going to basically do the same thing. Aussie, we are low basing here. So at the moment, I am not interested in the Aussie. However, if we can get a move out of these ranges, then Aussie goes back on the table. But for right now, it's not in the playbook. And here we have the Kiwi simply falling, rallying. Okay, this rally's been a little stronger, hasn't turned over yet. I am neutral on the Kiwi here as well. When we stack them up from +3 to -3, you can see it's very clear. There's really only two plays here on the long side, Swiss franc and yen, and CAD and dollar. Now let's talk about Swiss franc and yen because these are both risk-off currencies. So this trade will work best if the equity markets fall. So the best trade that could happen tomorrow is a weak jobs report, which means we should get weak dollar, we should get weak equities. We should see a spike in yen and Swiss franc and a fall in the dollar. That is the best setup for sure tomorrow. Here's the problem. We don't know if that's what's going to happen. So if it's weak job report, I think it's a no-brainer. It is dollar Swiss franc, dollar yen, and dollar yen first, dollar Swiss franc second. If it is a good job report, so let's say it comes in as expected, and this is what I think is the most likely scenario. I think we're going to come in as expected, and the market's going to breathe a sigh of relief and rally 1% or 2%. If that happens, all of a sudden short dollar doesn't make a ton of sense. And now we're on a risk-on environment, which makes these not make much sense either. When I'm looking at this board, I can't come and put together a trade that I like in the case of a strong or a decent jobs report in a strong equity market. So that's the problem. I just cannot put together anything here. Now, after we get the movement tomorrow, can I go in and analyze things on Friday and find maybe the Kiwi has moved up to a +2? Sure. But as it right here, right now, I'm really only looking this as a weak number where I'm going to be short dollar yen or short dollar Swiss franc. My favorite is dollar yen, and I said this last night, or I said this on Wednesday night, dollar yen is the trade. It's the only trade I'm looking at. Is it dollar yen? As you can see, here's a 4-hour chart. We fell down, we based for a little bit, we fell. This is more of like a falling base. These tell you that it wants to keep going down. Typically, when you have a big fall, you get some buyers that come in that stabilize it. When you get something like this that's not, really going sideways and still dipping down, it's a good sign that it wants to stay weak. So let's talk entry points. I think we want to go down to even a smaller chart. We're going to get some better indications of where we want to be. I think anything below this 142.85 is really where I'm looking here. Now remember, there's 3 different ways that you can trade news. There's before the announcement, there's on the announcement, and there's after the announcement. I always want to make sure people understand this going into trading a news report. If you are in before the report, this is the highest risk, highest reward way to trade a news event. Here's the problem. It's very fast moving. There is slippage. If you have a stop out there, it doesn't mean you're going to get stopped out where you think you are. So if you had a stop at 183.10, this is a 1 minute candle. You may not get filled up till 183.50 because you're just in the line. You're in the queue. So you've got more risk than a regular forex trade if you enter before. But that being said, when you're right, these moves are phenomenal. So make sure that you understand your risk here. This is where we really like taking half positions in pyramiding and have a double stop. So if your stop was usually 100 pips, now it's 200 pips with the half a position. Then if it goes your way, you start to add into it and get into a full position. If you enter on the news, meaning that you've got orders out there resting, these also have some risk, but not as much. Here is a candle, and if you take a look at this candle, it is a nasty candle, and you see these all the time around news announcements. And here's the thing, if you got long, you got kicked out. You got stopped out. And then if you got short, you got kicked out. As you can see, at the end of the candle, this is a 1 minute candle. At the end of this candle, it didn't go anywhere, but both longs and shorts got stopped out. This is why you cannot have tight stops if you're going to be trading around news reports. This is where we like half positions, double stops. That means that you can sit through a lot of this volatility. And then, of course, you can do what's called the second stage entry, where you're basically saying, I'm going to let that initial freak out happen, then I'm going to take my position. That is the safest way, but you are going to miss a lot of the big move that happens on the announcement. For tomorrow, everyone be safe. Make sure you know what you're doing. I think the best trade out there is a weak jobs report that should help the dollar weaken because, again, people are going to start to believe that the Fed is going to be more aggressive than the market thinks it is right now. That's going to weaken the dollar. And then also equities are likely to fall, which is going to really help the yen. I think dollar yen is the only trade. And if you say, I just don't want to trade yen, then yes, Swiss franc. If it's a good report and the market likes it, I don't like any trades at all, and I will not be active in that trading session. Well, this is the preview for the payrolls report. Goodbye, everybody.